Good morning and welcome to the ADS Securities Markets Update. Today we'll preview the FOMC decision only, and you can follow our Markets Update reports through our social media sites and the ADS Securities or ADS Research tab on ADS Securities website. The Federal Reserve Open Market Committee will announce its decision in addition to the economic projections later today at 22 Abu Dhabi time, 18 GMT time. And 30 minutes after the decision, Janet Yellen will hold her press conference at 22:30 Abu Dhabi time, which is also 18:30 GMT time, which is likely to be the key for the markets. Once the Federal Reserve announces decision, here's what to look for in the statement. First of all, we have to look at the guidance change of if there will be any new forward guidance. The majority in the markets believes that the Federal Reserve is likely to remove an assurance from the statement that it will be patient before beginning to raise interest rates, opening the door to rate rise as early as June. 69 of the 49 economists polled by Bloomberg News thought that the phrase would be replaced by some other form of guidance, and 20% only said it would be cut and nothing would be put in place. And the second thing to look at also the updated interest rate projections. The Federal Reserve officials' a new quarterly forecast will show they expect that the interest rate or the benchmark interest rate should rise more slowly than before, given the fact of falling inflation and continuing slowing down in the global economy in general. A third thing to look at also the dollar strength. In her press conference, Janet Yellen can expect also some questions about how the dollar appreciation will affect the outlook for the monetary policy, especially after the recent gains which weighted on the U.S. economy and the U.S. exports. But Yellen might downplay the impact of the stronger dollar or might even blame it on the global developments. At ADS Securities, we believe that the Federal Reserve may surprise the markets again by keeps the phrase patient in its statement, especially after the recent slowing down or the recent economic disappointment. However, if the Federal Reserve removed the phrase, we believe that they will replace it with something similar or with another phrase, or introduce a new targets for the forward guidance, which would be also equal to keeping the phrase patient. As we noted in our previous reports many times, since the end of the QE back in October until today, we had 70% of the economic releases in the US came in with a disappointment, while more than 90% of February's readings also came in either contrary to the market estimates, weaker than expected, or even shockingly weaker. Ending QE also with a higher US dollar in addition to the global developments, all of these factors are leading to a slowing down and in the major economy or in the US economy. And the Bloomberg, if we look at the Bloomberg economic surprise index for the US, it basically collapsed recently to the lowest level since March of 2009 at around -72, while the Citigroup surprise index also for the US tumbled to the lowest level since August of 2012 at -72 as well. The recent economic releases suggest that the Federal Reserve should be more patient, as there are more than 40 economic releases has missed the estimates, and this is also only a list of the some of the economic releases. We have more than 40, but this is only a list of most of the economic figures that also missed the estimates and even came in contrary to the market expectations. However, if we look at the growth estimates, they are also sharply lower from 3% to 2.4. However, Atlanta's Fed is estimating only 0.3% growth in Q1 of this year only. Moreover, the inflation estimates are way lower now, given the fact that the oil prices are at 6 years lows again, and Bloomberg year-over-year CPI estimates for the US is now at record low of 0.3% only, and this is way below than the Federal Reserve target, which is around like 2%. Therefore, falling growth due to a stronger dollar, and in addition to and the end of the cheap money era in the US, side by side with falling inflation, there will be no reason for the Federal Reserve to be hurried to raise interest rates in June. But the major change might come in again in June, especially if the economic releases continue to weaken further, and then the Fed might extend the patience again beyond September or beyond even June. Today's decision is a very close call, but we believe that the Federal Reserve might downgrade the growth and the inflation estimates again for this year and the coming years as well, which might again cap the US dollar rally for some time, and then the data will be the key from now on. This is only a quick preview of the FOMC decision later today. Follow us on our social media sites to get the latest or the special report for the FOMC decision, which we will include more details about the expected scenarios for the US dollar reaction. I will see you once again tomorrow, and you can follow us again on our social media sites, Twitter, Facebook, and YouTube. Have a good day. I'll see you once again tomorrow.